First of all, God bless all of you all. Ganpati Bappa Moria. My request to all of you all is please make a 5-minute note. Why do you think markets are going up? Why do you think stock markets are going up? So RBI governor has very clearly said there is a disconnect between the real markets and financial markets. So why do you think markets are going up? We have got a very esteemed speaker joining us today. The name is Mr. Ratish Varier. But before I get into Ratish's profile, you all take 2 minutes. Why are the stock markets going up? Is there a disconnect? What do you think is happening in markets? So let's read the chat for a minute, which was a good chat. Sir, in history, we have seen that whether it may be global crisis or Great Depression, we have seen a bounce back. Similarly, this pandemic is coming to an end. So I believe hence everything is coming back to normal. We are seeing a rise. Ninat Iyer is saying, in my opinion, financial markets are going up due to improving confidence among investors, recovering from the COVID-19 pandemic. Secondly, there has been an increase in FIIs investing in India. Shanmuga is saying, reduce interest rates by RBI so that people will have to invest their money elsewhere. Yash says, huge amount of foreign money has come in June. Okay. So this is precisely the reason why I wanted this class. How you are getting painted by what the media is saying. So this is exactly what the media is saying, right? Oh my God, that COVID is almost over. Bete, kya bol rahe ho aap log, ha? COVID is almost over. Kya bol rahe ho, bache? Do you realize what some of you are saying? Some of you are saying increased investor confidence. So I would now just pull back. I would like to introduce today's guest speaker, who is from the market, absolutely from the markets. The name is Ratish Varier. 15 years of work experience in equities and fund management. He has been a fund manager for the last 10 years with experience across insurance, asset management company, portfolio management services, and alternate investment fund. Ratish has managed $2 billion worth of asset across large caps, mid caps, small caps. Is currently with Sundaram Mutual Fund, managing small cap, infra fund, and other funds. Ratish has worked with Mahindra Asset Management Company for 5 years. He was head of equity. So he was heading their equity division. And he conceptualized the entire mutual fund business of Mahindra Group. Before that, he was with Reliance for 8 years. I believe dear Ratish joined Reliance after Syscoms. I repeat, Syscoms 2006-8 batch. Post his PGDBA from, he joined, Sharekhan as a research analyst and ICAP as a broker for corporate bonds. Of course, he has done additional certifications like certified portfolio manager, etc. A person from the field who understand. No comments, right? Some of you have given some good chats. Now, nobody should put any chat. You will be shocked. You will be absolutely shocked when Ratish ji starts speaking. Shreya is also welcoming you. I think about 30 odd chats, sir, just saying welcome, welcome, welcome. We said that kya bolu main. Welcome, sir. All over to you, right?
Thank you, sir. I want to tell you one thing. Can you hear me, right?
Yes.
I want to tell you that time, now, every time you're right, sir. Without you, none of us have achieved anything, right? Whatever you're being tough, or that all made us even tough in this markets, volatile markets, in even our daily lives, personal life. You have brought about a lot of change for us. So I'd like to thank you first, and thanks for inviting me specifically to this Syscom presentation. I'm coming here to Syscoms, I think, because of this COVID. Otherwise, I would have been there if sir would have invited me. So I think after 2008, for one alumni meet, I had come. After that, after 12 years, first time I'm attending Syscoms meeting. Thanks to you, sir. So hi everyone, I'll just give some brief background about myself, what actually we did in SIS. So you all will get a perspective, and then I'll come to markets, etc. So I have a presentation, I'll present to that. So before that, I'll just talk about most important thing. I'm just reading all these chats which are coming through from Yes Jain. For example, he's asking why are investors withdrawing money. Somebody is saying a lot of FI flows are coming through. I read a very interesting chat which talks about Subramaniam. He's talking about speculation levels are high. I think speculation levels are high always. It's nothing new. Then somebody is talking about huge amount of foreign money. multiple chats, right? I just request to all the students here, irrespective of first year, second year, most important thing for stock market is, first thing you all do, every day stop watching CNBC. If anybody is related to CNBC, sorry for saying that, please stop watching television channels. All these answers I'm seeing, it's coming from Lata and other sources, right? All these sources. Reduced interest rate. So there is one which is coming in from reduced interest rates by RBI so that people have to invest. It's a very good argument, but the way you have put it is not right. Shanmuga, right? What he's trying to say here, I understand. He's saying because interest rates are lower, there is no other asset class to invest, so people are coming to equity. Yeah, that's one of the very valid arguments nowadays, which wealth managers, try to persuade investors to put money in equity markets. But these are all very macro answers. So first thing, what I like to tell all of you all is stop watching CNBC, etc. Even a lot of experts, including my colleagues, whoever comes on TV, they all talk with the interest of marketing their own product, nothing more than that, right? Even TV channels, whatever, even today, non-CNBC also, a lot of Sushant, Rhea, and all that thing is going on. Everything, please understand, is being done for TRP and to make money. Everybody once all are studying today, once you come out to the real world, professional world, everything what is done is at the end to make money, right? Everybody has a family, everybody has to feed a family. Even they are saying India first, world first, that's all good to say. So always anybody, whatever they talk, whenever you're watching, if at all you're watching TV channels also, take it with a pinch of salt. So what do you mean by a pinch of salt is? Please read through thoroughly all your books. Like when I was there, I think there was a book called Prasanna Chandra. I don't know it is there right now also. So please, every page of that, please read through. That is the Bible for financial world. Whatever today's world, a lot of people ask what is relevant. Everything is relevant, whether it is beta, expected rate of return, whatever you call it, right? Efficient market hypothesis. Everything comes to see how you apply that theoretical knowledge into practical world, that is different. But all that knowledge comes into not only your professional life, also into your personal life. This is my 15 years of experience. I have learned that I had certain experiences in SIS. At that point of time, our dean was Mr. A.K. Sengupta. Right? So in the first year, we all had options to choose which field we had to choose, whether marketing, finance, HR, etc. So he asked how many of students want to choose finance as a profession. I was one of them who had raised my hands in that auditorium in SIS Nerul. So he had asked one question to me. I could not answer that. So it was one Tuesday, Wednesday morning. I faintly remember that day. So he said, no, you can't get into finance. You have to get into marketing, right? So I went immediately to his cabin, first floor. His cabin was there at that point of time. Okay, I asked him, so, what I need to do to get into finance. So he said, are you ready for a challenge? I said, okay, please tell me what. So he said, please read through Prasanna Chandra. I think it is a 434, 435 page book, I think, if I'm not wrong. Please read through that book. Sunday, so it was a Tuesday or Wednesday. He said, Sunday at 12 o'clock, please come to my cabin. I'll ask you a couple of questions. If you're ready with those questions, answers, I will put you in finance. Otherwise, you go other field. So, common field, if you're not able to get to HR, not able to get to finances, you get into marketing, right? So that was the scenario at that point of time. I read the entire Prasanna Chandra in that next 3 days. I did not understand half of them because I was in the first year. Certain technical factors were there which I didn't understand, but I saw through that. At that time, mobile, etc., Google or etc., very not that relevant, right? And it was expensive. So, but I read through the entire book. I went back on Sunday exactly 12 o'clock. I was there in Sir's cabin. He asked me, so did you read Prasanna Chandra? I said yes. So he asked me, okay, can you explain what is there in page number 335 something? So I faintly remember, he said open book it is. So I opened the book and I read the page and I started explaining. He said, please stop, you're getting finance. So I asked him, sir, I have not answered any question. That day he gave me a learning. He said, no, I understood now. You have read the entire Prasanna Chandra because the way you're reading, how fast you're reading, I understood you have read it once. It is not the first time you're reading. Please remember this book is a Bible. From that day, actually, I realized whenever in my next 15 years of my work professional, not only me, a lot of other colleagues, whether from SIS and other colleges who are part of this financial world and in other world, they all said that, this book gives us a lot of relevance. So why I'm saying is that specifically, not only Prasanna Chandra, I'm saying a lot of other books Please read. That is what I'm trying to say. That is the most important thing. Read, read, and read. Stop watching news channels. That is how you will get a lot of understanding in terms of how markets move, how various industries move, etc. So I'll quickly run through now my presentation. So first thing I want to tell you, I'm very happy again to say that I'm very happy to be here. Why I'm saying that this is the best time for you all to be in the educational world. It's not because this side of the professional world is tough because this pandemic scenario, etc. No, this is a tough time actually, right? Anybody who's today coming out of from this educational world to professional world, people are finding it tough to get job. Very frank, I'm upfront, frank to you all. It's tough, right? Recruitments are low, very few. When we were all coming out of MBA college in 2006, that was a boom years, 2003 and 2008. At that point of time, anywhere you could apply, and at least they would have called you for interview. But I will tell you through my learnings, this is the best time, y'all are. And I'll walk through the presentation and I'll try to correlate why y'all coming out to this college world and India is in a situation today, why both are in a sweet spot according to how markets, generally industries are moving here. So I hope y'all can see my presentation. Can y'all see my presentation? Which I've shared?
Absolutely yes. Absolutely yes. Lucky you.
Okay. Yeah. So I'll just start off saying that lucky you. What I meant by lucky you is best time, perfect time. Y'all are in markets. Y'all are in the final years of your study, whatever your educational career and moving to professional world. There's a common phrase: enthusiasm is common, endurance is rare. So this is the time. Such times are when you get your endurance going, right? It's when you come up and you get noticed. There is so you all, I hope, know who is Warren Buffett. Please, as much as books possible, anybody who wants to get into the financial world, whether it is equity, fixed income, anything, even not only fixed income, equity, even if you want somebody who wants to get into corporate finance, anything related to finance, please read his books. That's very important because there are a lot of, it is not that he's because somebody who has made a lot of money, etc. He gives you certain anecdotal evidences of, how world has moved, how certain industries are moved. That is what you have to capture, not how he made money. That's all irrelevant. That lot depends upon luck, etc. But you have to understand what he understood. That is what you get learning from those books, right? Please understand. He has made a very famous quote which everybody uses in the presentation. I make no attempt to forecast markets. My efforts are devoted to finding undervalued securities. So what do you mean by that? He doesn't see where markets are. For example, Nifty, it is at 12,000, Nifty is at 7,000. For him, it doesn't matter. He looks at company specific details. He understands companies. Why I'm putting a quote here, this thing is today, don't look at the outside world, right? How COVID is moving. So somebody I saw in the chat also, COVID is coming down. In India, at least COVID is not coming down. Actually, it is spreading more hinterland. It's actually getting a little bit more widespread, even though we are opening up as an economy, that is more of political compulsion. But if you look at the spreads, we are actually daily cases in India is number one. Yeah, we can talk about positive factors, but realistically, things are tough here, right? Because of this COVID. But don't look at all that. When you're coming to work, what you have to look at, understand where you want to, please find your individual interest where you want to get in, work on that. Read on that, understand that, do more research, get into people, contact people who are in those professional world. That is where this is the time to do it. Because, and why I'm telling is this is time, as I said, if you're not looking at Corona, etc., this is the time because markets are weak, not stock market. I'm saying generally economy is weak. You will get to learn a lot of things. It's when you come out of a good economy, generally you don't learn anything. So I'll just tell you this Warren Buffett quotes. If you see, focus on stocks, right? Don't focus on markets. If you see this superb slide, there's two slides. Those 2 points I want to make in the slide. If you look at the right hand side, undervalued securities you get in bear market, right? This is what I wanted to say. Please concentrate on this. He doesn't make any effort to forecast markets. What effort he puts it to identify stocks, right? That is what. Please correlate this with your careers. Identify where you want to get in. Focus on that. Learn. Like, aim, focus, I call it. Please like what you want to do, aim for it, and focus constantly in doing that. If you do that, this is what you get. People who would have done their homework pre-March, and you would have understood companies who are doing well, and when they got opportunity in that bear market, look at the returns companies who have made between March. When don't look at overall markets, right? Markets would have given you 40-50% return, etc. But somebody who have invested in individual stocks, the same thing if you would have gone back to 2018 end, when markets were doing very well globally, 2017 end, sorry, when markets were doing very well globally, everything was fair. From that point of time till March, nobody made any money. So that was good markets, right? Bear markets is when you sharpen your skills, you are ready, and when you get an opportunity, grab. Look at the returns you make. Two things I want to point out. First thing, which I already mentioned, please correlate this with your careers. Please focus on what you want to do. Learn. The bear markets is when you get to learn the best. Bear markets, I'm talking about general economy. Concentrate on your learning, contact people, and when you get into the professional world, industry, during these times is when you can actually make a difference, not when markets are good, economy is good, right? Second thing what I wanted to say, when I saw a lot of this chat, so I'm adding this. A lot of chats mentioned that a lot of FII flows have come in, economic recovery has happened, or corona is going away. No, if you see the stocks which have done well, these are only 10-15 stocks, but across the markets, stocks not only in India, globally, which has done well, there are 2-3 things which have done well, which have actually benefited from COVID. It has nothing to do with recovery from COVID. The first thing, let's look at US, where the recovery has happened. Biggest recovery has happened in NASDAQ. And if you look at all companies there, whether it is NASDAQ is a composition of all digital companies, whether it is Apple, Microsoft, Amazon, Alphabet, which is Google, right? All these companies, actually, if you see their earnings are growing multifold even in the last 3-6 months. They actually got benefited from corona, right? People are sitting at home, they're ordering more, they're doing more Google search, they are looking at more mobile phones. Like, for example, in India, if you see in last 6 months, because all the schools and colleges are now shifted to home, people are ordering more mobile phones, laptops, apps, so Apple is benefiting. So all digital, even in India, if you see, there is one company, it is there here. Yeah, if you look at the large company which has given 240% return, it's called India Mart, right? It's if you see, it's an SME exchange. It's a classified where the buyer and seller puts his codes, and the exchange. There is a website. If you do indiamart.com, he actually gives you classified. The seller can put his ads. Buyer who wants can select all the seller and get the deal done. For the SME, it's like an Amazon, but at the B2B segment. Look at that. That company has benefited. So one type of companies who have benefited because of corona actually has done well. Please understand, markets is not speculation. Might be 1 or 2 days of speculation, but as you move from day to, so it's like a test match, right? Innings by innings, day by day. If you count, when you make it 15 day, 1 month, 2 months, we call it series, 1 series, 2 series, 3 series. Make it 6 months, 1 year. Actually, it reflects the fundamentals. Digital is one thing which is benefiting because of COVID, and that will happen till people are sitting at home. I remember post the first exit of lockdown, where the central government had talked about complete lockdown. I think in the month of April, they had released the first lockdown. If you see cities, city crowd, generally, suddenly people started moving out, right? Post that, if you see, the traffic and all that started reducing again last 1 month because of this COVID rise. So again, digital is gaining prominence. So it was not 1 month, 2 month phenomena. It is continuing to be structural in nature, where it is getting benefited because of people sitting at home. That is one segment which has got benefited. Second segment which has got benefited because the whole world is affected by this virus. People consuming medicine, people doing more research, vaccination, etc. has gone up multifold, not only in India, globally. So if you look at a lot of companies in this, which have done well, these are only top 15 companies, but still, Loris Labs, Suin, Jubilant Life, right? All these companies, even GMM Fodler, all these companies, they have done well is because globally spending on vaccination, spending on medicines have gone up, and these all companies are somewhere in the value chain involved in that, whether it is a equipment industry, GMM Fodler is, whether it is, in the medicine, API, that is molecules, a lot of these companies like Suin, Loris are present in. The entire value chain, a lot of these companies are present in. So please understand markets which have gone up. So if you look at Nifty today, markets from 7,500, I think it is around 11,500, right? So almost 50% return Nifty has given. If you look at Nifty constituents, pre-corona, financial services, which was 45% of the index, was doing phenomenally well, whether it's an HDFC Bank, Kotak Bank, ICICI Bank. Actually, all those companies have underperformed in the last 3-4 months. So please remove that misnomer where saying the markets have gone up, speculation is there, so recovery is happening. It is not that. Market is getting realigned to a new world of people at home. So if you look at Nifty, for example, as I said, from 7,500 to 12,000, the biggest contributor, for example, Reliance, the Geo, again, a lot of connections are going up, right? We are consuming more data day by day. For example, pre-corona, I'll talk about when I was in office, I used to hardly consume 2 GB, 3 GB on my phone. Nowadays, what I have taken the Geo fiber connection, I consume 18 to 20 GB. It's presentations, whether it's meets. My daughter, who's in second, third standard, she has 3-4 hours of Zoom classes. My wife, she works in a banking industry. She has 12 hours of other meeting applications. So we consume 20-25 GB. So it was a 6x increase, right? So it was happening in the telecom industry. If you see, that has been the biggest participant for Nifty going up. Digital, which they call. Second, pharma companies, which I earlier explained, right? So the constitution of Nifty has changed and it is reflecting the real world. It is not just markets are going up. So if you see from March 23rd, which I'm mentioning till August 23, none of the financial services companies have done that well. Yeah, last 10-15 days, obviously there will be some speculation being stock market, but 90% of the contribution has happened from a lot of these companies which actually got benefited because of Corona. So please understand markets, understand why it's going up. Don't look at CNBC. That's what I wanted to again say. Look at why it's going up. It's actually relating to the fundamental value of the economy, right? This is what one point after seeing chat I wanted to showcase. Yes.
Mona, can I just intervene? So, most important feedback from a person in the market. Students, please know. So, one is FANG. Please remember some short forms. I'll just take 3 minutes. FANG stands for, but ये आपको जरा याद रखना है, US concept है, Facebook, Amazon, Alphabet, Netflix, and Google. Second, Ratish was mentioning about a new normal. He's saying that this is a new normal. All of you have to remember it's a new normal. Third, this is not a complete market recovery. Certain select stocks are going up, and because there are certain stocks which are going up, they are picking up and pulling up the market. In India, Reliance is one of the stocks which has really moved up, and that is why the Sensex has moved up. But to say markets have gone up, it is not right. There is still no economic recovery. Sorry, beta kisko hurt kar raha hai to. And in fact, it is, beta ye koi interview mein bolega na, maar padegi. We are looking at a recession. First time post independence, we are looking at a recession. Last but not the least, before I give it to Ratishji, RBI governor himself has said there is a disconnect between the financial markets and real markets. To understand the index, I will not like to invest time. Please remember, index is largely governed by the top 10 stocks, and that composition keeps changing. And as Sir wonderfully mentioned, the composition has changed also, right? And this is not a broad-based recovery, not a broad-based recovery. I'll now pull back and let the experts speak again.
Thanks. So I'll just put one more slide, then I'll actually get into markets is detailing. I'll tell you something. I myself came out of my MBA in 2006, right? When I actually came out, I always wanted to get into the investment world. So that's why if you see in my profile, I moved from Sher Khan to ICAP and insurance company, etc. I wanted to always be on as a fund. I always wanted to manage money. So long back, I was interested in markets. I used to put my personal money also in markets, etc. Why I'm saying all this is, in 2006, when I actually finished my MBA and I was actually getting into the real professional world, whomever I was contacting at that time, there was nothing like LinkedIn, Google, or whatever you call it, Facebook, etc. I think Orkut something was there. We used to do cold calling, sitting in SIS. We used to do cold calling. We used to do Google search, identify the companies. I take the landline numbers and keep on calling. So like that, when you call actually in 2006, because markets were good, economy was good. So if you see for India, 2003 and 8 was a golden period where we were growing consistently real GDP by 9% and a 6-7% inflation. We were easily growing by 14-15%. best decade, that 2000 to 2010, or between that, even if you slice that between 2003 and 2008, whoever had come out of that, easily you call anybody, they were ready to uh, call you and listen to you at least, right? When that point of time, so out of 10 people, if you contact, one people will entertain you and they'll say, okay, join us, right? That time, but whoever have joined in that point of time, very few people today, I'm not saying I'm successful, but have grown the ladder. You know why? Because there's a bull market. If you see this slide on the left hand side, this is my learning experience by looking at people. नौकरी मिल गया, ठीक है. I remember one of my colleagues, he got placed into Z. He was the best. He was in marketing. He was the best. सबसे अच्छा तभी CTC मिला था उसको. एकदम खुश था. आज भी वो Z में है. And the problem is no complacency sets in. अच्छा जिंदगी आराम है. अभी मिल गया नौकरी. The eagerness to learn more finished. That is comfort zone में आ गया. Refuses to learn. High on information. WhatsApp पे pass करो. But I'm seeing he's my good friend. Last 2-3 years he's been talking, I want to change. Now he's finding it difficult to find a job because 10-12 years being in one company, and now the bear market has started. He is not up to scale with his knowledge. He himself admits that. He's finding it difficult. This is what you gain in bear market when you come out of from your MBA college. Now, which sir said, right? I'm just trying to relate that. Recession, best time to come out. I'm telling you guys, nothing to lose. You will get to learn because you're in such a tough situation. Please learn. This is the opportunity where you get to learn, and you're starting from zero. And it is not information. That's why I'm saying your CNBC gives you information. Get your knowledge right, and this is the time you have time to learn more. I'll give you certain stock market. I'm from stock market. I'll give you certain examples of stock market people who have done well, who have come for bear market, who everybody knows. Ramdev Agarwal, I think everybody will know from Motilal. He's the owner of Motilal Oswal. He's come from a small mid-town. His ambition was only one thing: make money, right? Like my also. When I decided stock market is I want to make money in life. Simple. So this is the one place where I can make a lot of money. I know based on my ability. That is why I decided I'll be in stock market. Similarly, Ramdev Agarwal also decided that he wants to be in stock market. He started his own Motilal Oswal. But the period when he started was tough periods in markets. He learned, and then 2003 to 8 phase he made all his money because he learned in tough markets. He entered in tough markets, right? He started something of his own. Then somebody called Madhusudan Kela, who was the chief. He was my boss in Reliance, in the ADAG group. He was the CIO there of Reliance Mutual Fund. Till 2 years back, it was the largest mutual fund. He is rated the best fund manager year after year. Even if he is from a small, I think, village called Rampur, he also learned a lot of things in bear markets. As I said, 2000, if you see tough periods in India between 1998 and 2003 were tough periods, right? He all came out of that point of time. Learned a lot of things that point of time. Great difficulty he got into Reliance. And from there, stepping stone, as he started from zero, from a research analyst, he moved to fund manager, CI, he learned a lot of things. And that because he has learned from bear markets, when bull markets came, he was completely psychologically, what I say, normal. He should not get excited, right? As I said, he was not enthusiastic. He knew when the correction will come, so he was able to take tough calls of exiting certain companies when stock prices went up. That is where he made a lot of money. He was one of the best fund managers. Similar like Krishna Kumar, today I'm working in Sundaram. He's a CIO. He's a CIO for the last 12 years. Again, he has also come in such markets. Lot of learnings, humble background, coming in from small town in Tamil Nadu, humble background, learning in that bear market. That's what I'm saying. That's why first statement, lucky you, best time to read, best time to meet people. You learn a lot of, because now you'll understand how bear markets, how, as sir said, first time your recession post independence, you learn a lot of things, how recessions, markets move, economies move. You learn a lot. That experience you will utilize when next cycle comes to. And always money is made not only in stock market, even in your professional world, you make money in the next cycle. Somebody who's come in the cycle, it's difficult. He has to wait even longer for the next cycle because you have come in the bear market. I will take you through my next slides why India could be in a growth phase in next 10-15 years where you could gain lot of whatever wealth, whatever you want to achieve, if you're able to learn from this bear market, right? That's why I'm last point. If you see, go all out, read, and meet people. Whatever you all have today, technology, LinkedIn, etc., and all, you all can keep meeting people. And knowledge is the best where you can, it's much better than information. So I'll move to the now presentation. So so as I said, lucky you. Now I'll say lucky India. I'll tell you why lucky India. If you see last 20, 30 years for India, it's been a lost opportunity, right? 1990s, if you go, whether it is a per capita income, whether any metrics, whether steel production number, auto production number, any number you take in economic parameters, India and China were equal. Today, they are 10 times larger than us in any industry. We produce 100 million ton of steel, they produce 1000 million ton, right? We do what Maruti does, 1 lakh, 12 lakh. I think we do some 30 lakh car production in a year. They do more than 1 crore, right? So everywhere it's either 5x, 10x. In terms of per capita income, they are some $16,000. We are some $2,000, right? Again, 8 times. Everywhere they moved up in last 20 years because those are the biggest competitor in last 20 years. That's why I'm specifically talking about China. We have lost out in last 20 years, but this is a golden opportunity. Nothing is to lose because as Sir said, we are moving into recession. The average, if you look at consensus estimate, GDP numbers will be anywhere between -5 to 6%. It could be more also based on how, the COVID cases are increasing, etc. But, what will work in India's favor? These are certain snippets. I will cover that in future slides, in slides ahead. Strong leadership. First time, I think, in many years, it's not what he talks. Strong leadership, I'm only saying in terms of not Narendra Modi, but I'm saying stable government. We having only single party ruling the country today. So any policies, if you see a lot of policies in the last 12 months can be quickly covered. And second is negative sentiments. There are a lot of negative sentiments on a lot of other countries, right? Whether it is China or a lot of other countries, which can work in India's favor. And third, always we had a huge labor market benefit. Now that huge labor market benefit we could gain because of this negative sentiments against these countries, right? So what I'm trying to say here is, y'all are at the right time. India is the right time. And without India doing much also, we can gain in next 10, 15 years because of these advantages.
So couple of things, Bede. The best companies have been born during recession. So that is one very important thing. So in fact, Ratish himself, when he came out of college, that was just the beginning of subprime crisis. So if you wonder which are these companies, let me just tell you, IBM was born during recession. Disney was born during recession. HP was born during recession. Hyatt was born during recession. FedEx was born during recession. Microsoft was born during recession, right? So now if you still believe, sir, can you give me some more names? Salesforce, Google and Facebook was born during recession. So recession is the best time to launch a business is what we teach startups. Second, right? Second, as Ratish keeps saying, this is the time where you have to learn. And one beautiful word that Ratish used, I'm so happy, the difference between information and knowledge. I think it has come out extremely well. All of us have the information, but how many of us are converting that to knowledge? All of us are blessed with talent. How many of us are converting that to skill? That can only come through sheer hard work. So please note these points, right? And this is extremely important because I told Ratish, jobs are going to be very difficult now. So we have to encourage the students, one, to look at startups. Second, of course, be prepared for interviews. One very important correction. Ratish cannot take stock specific questions. I will be taking it. So next time's assignment is, I will help you all with that, is the deal of Reliance and Future Group. So that is the assignment for all of you all. Please do it. We will discuss it. I'll also read and do it, but please don't ask stock specific questions to the speaker because he is working. He is a fund manager, but please understand that. Over to you, sir.
Yeah. So, Sir said a lot of examples in terms of stock market. I'll give you one example. In real world, India went through, in cricket, we went through a crisis in 2000 because of betting scandal, etc. and all that. Right? We got the best leader in our cricket recession, which was Sourav Ganguly in 2000, right? It is the best example. And because of his hard work is where we are today. Ask any expert, he'll tell you that. It is just because of him, right? So you not only good businesses, good leaders, as Sir mentioned, even today Reliance Jio is born out of recession only actually. So a lot of companies, Asian Paints, if you look at a lot of things, they learned when markets are bad. So all companies learn when the markets are bad. They have one down cycle and they come up, right? It's not only in business world, also in professional world. As I said, mentioned cricket, etc. In bear markets, if you put your hard work, is when you make. So that's why I'm saying you're in a sweet spot. I'll not say you're in a hardship or a hard spot. You're in a sweet spot. So I'll quickly run through, key drivers and implication for India as an equity market. What drives market? I'll quickly run through that, and what drives not only India specific. I'll run through even globally what runs. So I'm talking about key drivers and implications for India and also globally and its equity markets. What drives markets? Earnings, right? What is earnings? Earnings is how much profits company make from what sales they do. How you get sales? It depends upon a lot of macro parameters which that country has, right? So now if you look at globally, let's go back to history a little bit. If you go back, India has what advantage? Let's talk about that and why I said next lost opportunity, next 10, 15 years, why we could be, in an advantageous position. I'll give you now some certain evidences and hard facts which can help you, in judging whether India will do well or not. But before that, I'll just go to little history and talk about certain countries which have had certain advantages in their favor and they've done well, and why India did not do well, right? If you look at US and European nation, if you go read a lot of books, etc., you'll understand that why now they are superpowers. Even after that worst recession which happened in 2008, yeah, people say still Europe has not recovered, etc., but it had limited impact on their GDPs. Yeah, GDP has not grown, but people's per capita income is so high that they are still quite happy. So the happy index in those countries are very high. One of the key reasons, those countries long back had an advantage, right? Because Europe, if you look at, they did a lot of geographical expansion in long back, where through East India Company, even they acquired India, they had captured India and all. So a lot of wealth they took away. That advantage they had. They were the superpowers at that point of time. Because of that, that advantage still continues with them. So they already reached that per capita income and that continues. Similarly, in US, if you see dollar, yes, that is a common global currency. On top of that also, in last 20, 30 years, if they look at their political strategy, they are trying to acquire and play a lot of politics across Middle East, etc., try to control crude market, try to be a superpower. That all also gives you economic advantage. Because I am able to control a lot of things, I get a lot of economic advantage. Those were the models which are European countries or US countries ran, and that helped their GDP to grow, individuals' income to grow, etc. and all, right? If you go back 100 years history. Now, if you come to China, as I said, in 1990, India and China were similar. Europe and US, some form of democratic government they have, but China doesn't have. They have a communist government. So they are a different framework of growth. What they did, incentives, everything free by government, free land, free power subsidy, etc. Put up infrastructure. Mass scale production. As I said, they produce 50% of the steel, 40% of automobile industry, anything, power equipment, process equipment, anything you talk about, capital good companies, any industry. Even US companies have today gone and set up companies or capacities in China. China government was very clear, have to transfer technology to Chinese through JVs, number one, and second, put up mass scale. As you set up mass scale, today they control all the commodity markets. Today they control almost all the cap goods industry, which are low-end cap goods industries, right? Because of that, in last 10, 15 years, they have gained significant scale advantage. And that now economies of scale is in their benefit. They are turning out to be the lowest cost producers, etc. And a lot of, so that benefited them in last 20 years. Now coming to another set of countries who have done well is the third most important thing, innovation. So if you look at Germany and Japan, and in post Lehman crisis, so one more point I want to make here is, if you look at 2008, which country got impacted the most was United States of America, because whatever happened there, Lehman crisis and certain couple of housing finance companies all went belly up, was in United States. But if you see last year pre-COVID, US was one of the fastest growing economies. You know the reason for that, which sir mentioned in the first statement, FANG, all technology companies, all innovation happened, whether it was Facebook, as I said, 2006 and all, there was some Orkut, right, something, right? Facebook came through, Microsoft launched a lot of applications, Apple came through, Amazon came through, a lot of things happened in terms of technology innovation. Innovation drives economies. Germany, innovation. So if you look at please go and visit plants nearby. Plant I meant is factories nearby. Whether you know those companies or not, it doesn't matter. Do a cold calling and go and visit the factories. You will learn a lot of things. But when you go to those factories, one important thing is all machineries which are placed there are coming from Germany or Japan. They have created innovation in those machineries, right? What I'm trying to tell you here is, in last 100 years of global history, if you look at either through geographical expansion, which Europe or US had an advantage, mass scale production which China has, innovation which a US, Germany or Japan had, that gave them phenomenal advantage. In last 100 years, India had no advantage, no mass scale. We were just one of the countries who were producing all this. No innovation. In India, there is no incentive for innovation, right? There is no, because of, even if you want to do some innovation today, we only in last 5 years you're seeing Zomatos or the Baijus of the world coming up. That also through global funding. India, if you want to set anything, policies, processes, etc., are so tedious. Nobody wants to do any innovation in India, right? So innovation, there is no mass scale advantage, no geographical expansion. India only country is large, right? And it's a poor country, so India never had any advantage. Only one advantage, which I had mentioned earlier in my slide, advantage India had is demographics. That is people, all y'all. 70% of our population is 30-year-old median age. The best thing, that is the only advantage, and we have been saying that for last 20 years. That advantage can play through now. If you see in last 10-15 years, service industry, IT industries, where we have gained because of demographic advantage. Manufacturing, we have not gained. As I said, we don't have innovation in these slides which I'm trying to talk through. Services, yes, we have gained through because we know multiple languages, we are low cost, and our qualification levels are on the higher side compared to other countries. Demographic also drives consumption. Now I'm giving you a little bit more angle towards economy. Why again India can benefit. If you look at a lot of European nations, US nations, average age there is, as I said, India's average is 30. There the average age is much higher, 40, 45, 50, even 60 in certain countries like Japan, etc. There the power of consumption is low, right? India today, because the population is low, it can have a significant advantage of consumption if you're able to increase our income. For that, rural income has to grow, and today two things are very critical for that. In fact, three things. One is rural income has to grow, number one. Second, low cost of capital, which has to come through globally. As I said, Baijus, I give you examples, right? Baijus, etc. They're getting funding globally, and they're putting up all these innovation in India because there the capital cost is very low, and they continue to be even more low, and that can help India. That is all global support, because today India as a country is a capital starved economy, right? So global money has to come through. Free cost, they are coming in. It can help India. And also inflation helps India. Why I am saying inflation helps India is, if you look at today, still directly or indirectly, more than 50% of the population is dependent upon agriculture. Agriculture, whatever government talks about jobs, benefits, etc. If sugar price goes up, milk price goes up, vegetable price goes up, that is what increases the cash flow of the rural India, of the farmer, of the agri economy, which can again help India. So I'll walk through certain slides which can help, all this can play through, and it can help India, right, in going ahead. What I'm trying to say here is, in this slide, only advantage which India has as of now is demographics, which can help us in next 10 years in our journey. Now, just certain evidences which I mentioned here. So if you look at this slide, it is talking about since I told you, right, 2003 to 2008 was a golden period for India. And 2008, even Sir earlier mentioned, it happened, Lehman crisis happened, and then post that, recovery, etc. These are market returns in US dollar terms. Nifty index, SPX is S&P 500, and I've just selected one more index called Taiwan. If you look at all, India has similar returns. Yeah, we are 200, 300 basis point higher, but still, this is as on 10th July 2020. So it's 17 years history. Still, it's only a 12%, 9%, not significant advantage. 12% CAGR is not a big return when you're coming to country as India, with comparatively 10% in their own home country in US they're getting, right? So we did not gain an advantage even in stock markets, I wanted to say here. just to run through how India can benefit because of this COVID. Three things I wanted to say here is, if you look at today post-COVID, what globally economies have done. US में पकड़ लो, cases बढ़ रहा है, क्या कर रहा है? Monitor, the Fed is the central government there, central banker there, right? He just come and said, rates are zero, people come and borrow at 0% rate. Simple. Bankers can borrow money at 0% from Fed. Fed is the RBI there. That is what the second point is, monetary stimulus. Same thing they did in 2008-9, same thing they are doing today. Fiscal monetary stimulus, money is amply available. So that advantage will flow through to India. As I said, we are a capital-starved economy, that money will come through India. Second thing what I wanted to say is fiscal support. 2008-9, if you see, the crisis happened in the financial market. It was not felt in the real world. Real world, what I'm saying is the non-financial market. So fiscal stimulus was very few, very limited. Today, Corona is impacting every individual of every country. So governments have to step in with fiscal stimulus. What is fiscal stimulus? Fiscal stimulus is government spending, not central bank spending through putting more money in hands or reducing rates. Here, governments are spending. Governments are spending is putting more money in the hand of individuals. So if you look at in US today, post this Corona, post March, I think it is $1,700 every month. Every individual's account, money is credited $1,700. So you don't have to go out. At least minimum living standards you can maintain by that $1,700. And that program I think goes on till September. Post that they will take a fresh call whether to extend that based on number of cases. Right? Fiscal spending is happening. That is the biggest thing which spurts inflation. I'll come to that later, which can again help, as I said, help India as a country, because higher inflation, higher purchasing power, and that boosts consumption and indirectly helps economies, more job creation, etc. Next thing what I wanted to say is, which I mentioned here, high income growth, etc. Right? And the last point which I wanted to mention here is advantage pandemic is because geopolitical. What has happened, if you look at, as you all read a lot of news channels, see news channels, read a lot of newspapers, China, people are talking about a lot of things against China, right? That can again shift. Now you're hearing, even if you see industries which are put up in China, even 1% can shift to India. In last 20-25 years, China was nothing new problem post-Corona. Even pre-Corona, there was a slug fight between US and China. Still, you did not see any advantage moving towards India, right? Even though we say, that is what I was saying, like lost decade opportunity. A lot of things are shifted to Taiwan, etc. If you look at a lot of mobile manufacturers, other than China, furnitures, etc. Other than China, second biggest country will be Taiwan. IT industry, Philippines has become a big industry. Textile, if you look at, actually Bangladesh has gone above India in terms of textile exports to US, right? In spite of being such a small country. But now what is happening? China in post-Corona specifically, a lot of things are going against their policies, etc. That could benefit India because of somebody's disadvantage. Till now, it was not benefiting because we are not able to show our efficiency. Today, even though we are not showing our efficiency, because a lot of global companies have been here in India in the last 15-20 years, they want diversification because geographically we are placed in such a situation that little bit shift can happen towards India. Even 1% shift happens, that is enough to take care of India's 5 years growth. I'm talking about manufacturing shifting to India. We have that dream of 40% of our GDP, etc. could be manufacturing. Even though that doesn't happen, that shift, even 1% shift can benefit India. What I'm trying to say is only 3 points which can benefit India. Fiscal support supports higher inflation. Historically also we are seeing. Monetary stimulus continues. And third is this geopolitical shift. What I'm trying to say is can help India as a country, because this geopolitical shift, something can flow towards India, right? This is what point I wanted to make here. So I'll just, sir mentioned, I'll give you another example. We all have a luggage, right? Whether it is backpacks or luggage which we carry. 15 years back, we were one of the capable countries where a lot of, like, I think you all would have heard the name VIP. It's one of the biggest brands in the, even Samsonite, for example, one of the biggest brands in that space, luggage space, right? India in last 5-7 years, the number of travelers have jumped up 5-fold. We all want to go out during weekends, travel, right? Visit more places. But 15 years back, India was a hub for manufacturing, like VIP, 100% they used to source in India only for their luggage. They used to manufacture it in India. Today, you'll be surprised. 30, for example, a VIP company like VIP, 30% of their baggage, from where they source it is Bangladesh. The reason is labor cost. It is not salary जो देता है वो नहीं, जो तकलीफ होती है उनको इंडिया में वो निकाल के हम लोग ने बांग्लादेश. I'm just trying to give you example of economy it's so mentioned. Things have shifted. We have grown 5x in terms of travelers going up, but India को benefit आया नहीं actually. Yeah, stock prices have gone up or VIP etc. That's a separate point, but economy benefit नहीं हुआ है क्योंकि everything we are importing. I'm trying to say that how Bangladesh has gained advantage, right? So coming back, so if you see what I was saying is economy man, two things: how economy grows, how industries go, etc. Economy man, the governments have to, or the central banks, they are the two authorities, right? They have to do something for economies to grow, right? They have to create jobs, they have to put up industries, they have to make farmers cultivate, etc. and all that. So that is where we are calling as fiscal stimulus, is government spending. If you look at balance sheets of government, they have expenditure, income. What is the income? Taxes, which they collect, and disinvestment is whatever land or whatever companies they hold, they sell, etc. This is the biggest. On this side, they have expenditure. What is expenditure? They do is this only, which they call either fiscal stimulus. They call it either directly giving money in the hands of individuals or spending in defense, etc. and all. This I'm saying is direct spending because of Corona. If you look at all countries put together, they are going to spend $8 trillion. That is 9% of the world's GDP. Some country like Italy, they're going to spend 34% of their GDP as fiscal stimulus. Now you will ask me, countries' income is not growing, how they're able to spend more? Yeah, they're doing that temporary phases. As Sir said, nobody knows if it's an act of God, till when it will last. Nobody is coming out of their house. People are losing their jobs. Governments are putting money directly in the hand of individuals, borrowing more. So they don't have that much income. They're borrowing more and spending. They are postponing late. कल देखते हैं जब इकोनॉमी वापस आएगा, they will increase the taxes, etc. अभी फिलहाल तो उन लोग support कर रहे हैं इकोनॉमी को. This is very positive for India in longer term. Why I'm saying is that fiscal stimulus जब भी होता है, सबके हाथ में पैसा है. आज supply कम है. Let's talk about any agricultural commodity, right? India में छोड़िए, globally supply is less because of logistic issues, because people on labor is not coming into farm to produce, etc. and all that. Supply is less. I'm just trying to give you a theoretical example, make you understand. But incomes have not gone down. I'm not talking about India. India GDP is growing negative, but income, real income is not going down that much. I'm not talking about India again, globally, because governments are spending directly. Incomes are not going down that much. Basic expenditure still continues. So there is a demand-supply mismatch. If you see in last 3 months, if you read through, all your commodity prices have moved up. One of the reason metals, etc., is because demand is there, supply is not there, and because of this fiscal stimulus. And this will have medium-term implications. Inflation will move up, which I earlier said, as inflation moves up, it benefits India. Because India doesn't produce more, but pricing moves up. Coming to industries, industries benefit more, right? Industries benefit more when pricing move up. What is industries? How they make, companies, how they make money? How much they sell at what price? Price moves up. What is sales? Price into volume, right? P into V. V might be constant, but price moves up, my sales move up, my profits move up, etc. That is how companies do well, right? If you look at Britannia, one company which has done phenomenally well in last 3 months, post-corona, why it has moved up? One of the reason, not only volumes have gone up, people are consuming more biscuits, etc. People are consuming more premium biscuits, and he's having more pricing power. That's the inflation, right? Why I'm trying to say is that through fiscal stimulus, this is what is happening in post-corona world. Lot of globally, lot of fiscal stimulus happening, which did not happen during Lehman crisis. It's happening now. These are certain examples how US as a country is doing fiscal stimulus. So if you look at that black line, your fiscal deficit, which I mentioned, right? From 4.8%, they have doubled their fiscal stimulus, right? That much amount, 2x jump in the balance sheet of not only Fed, even US. Simple 4.8 to 9. I'm saying it's not exactly 2.2, 2.5x, but still they have doubled the fiscal deficit. That much money straight away they're spending. That's fiscal stimulus I'm talking about. Significant amount of fiscal stimulus. what helps, these are certain anecdotal evidence. Metal prices move up. Metal prices move up, which happened historically, and that can benefit India as an economy. Fiscal stimulus, may you're putting money in hand of individual supply. These are demand side stimulus, which people call. As demand side stimulus comes up, supply is not able to cope up, automatically demand, economics you would have learned, demand supply mismatch, prices move up, right? If you see in 2009, if you see the right hand side of the chart, post 2009, actually metal prices fell because there was no fiscal stimulus. Now, because economies have to grow, they will do fiscal stimulus. Metal prices will start rising. Like, let's take example, 453. This is, I think, steel price. $453 will move up to 600, right? Somewhere 525, and it moves up to 600. Companies like Tata Steel in India, JSW Steel in India will start benefiting. Last 10 years, they were not benefiting. There was a company called Bhushan Steel, for example, that went bankrupt. One of the reasons, leave the corruption scandal and all, watch politics talks about. One of the key reasons why he went bankrupt is he put up capacities when the steel price was at $668. He benchmarked his capacity at $668. When the prices were by 453, when my sales have fallen by 33%, my profits got eroded and he had no money to pay interest, right? When this goes back to 453 to 600, his Bhushan Steel's 5 million ton capacity becomes viable. And their factory open up, people got more employment. I'm just trying to trickle down the economic benefit, right, for India. So what I'm trying to say is that because a lot of fiscal stimulus is happening, metal price, etc., should start moving up, which will benefit India, companies like Bhushan Steel, etc. So, another point what I wanted to say here is, if you look at India, one of the people you would have read, I don't know how many of you all read, one thing I'll recommend every day, it costs only 10 rupees. Please get Business Standard, please get Mint, and please get Business Line. I am nothing against Economic Times, avoid Economic Times. These three editorials, as you get into the 4th, 5th page, even I think Sir writes, if I'm not wrong, in Free Press Journal, right? Editorials which, experts like Sir writes, please read that. There you get a lot of analysis. See, there are a lot of things are biased. Listen to that, read that, and understand information. Don't take their views. Only understand, get that knowledge, information, data that will help you. India, if you see in last 10 years, so if you see, as I said, one of the slides, 2003, 2020, we have performed equally in US, right? One of the key reasons is investment cycle in India has not picked up. As I said, the steel price, etc., went down. Nobody found it viable to put up steel capacity. If you look at, it was not only that reason. So what I've done is your gross capital formation. This is one Kotak report I have taken around. Gross capital formation is the capex which happens in India. In plain simple words, it can be broken up into 3: household, companies, and government which does capex, right? India, if you see in last 10 years, actually your in household, if you see the second line, household capex as a percentage of GDP, from 2012 to 2020, it has just fallen off from 16% to 9%. Fall off. It's a 50% drop in household capex. Reason for that is actually incomes have not grown, right? As I said, Bhushan Steel, etc., a lot of companies closed down. Income levels on India, if you see, real GDP from a 8-9% has come down to 4-5%. Incomes, there is no fair data available. Whatever our company does some internal assessment. What we feel is 2.5 to 3% is only income, real income growth of individuals have happened in last 10 years. Because of that, there is no being capex. What is individual capex? Building homes. If you see, as I said, 2003 to 2008, golden period in India. If you look at that time, capex which happened, 50% of the capex happened was towards housing. Building homes, renovating homes, whatever, etc., right? That capex in last 8 years have fallen from 16% to 9% of GDP. That could change. I'll tell you why that could change. As I said earlier, fiscal stimulus, etc., has been monetary stimulus, etc., has happened. Now, if you see today in last 5 years, as I said, income growth has been only 2-3%, right? There has been no income growth, but still there has been a 2 to 3% income growth. From 2012 to 2020, real estate prices have been flat in India. Let's take Bangalore as an example. It's a very simple example. real estate prices have been flat. And if you look at rental yields, what is rental yields? महीने में कितना rent भरते हैं divided by वो property का price. Simple. It was hovering around 1.5% in 2012-13. So somebody who wants to invest in property, why he'll invest? When my yields I'm getting is only 1.5%, right? Investment करने का जरूरत ही नहीं है. मेरे को savings bank account में 3% मिलता है, and my home loan rates for 9%. It's a negative carry. Somebody who has done investment from an investment expert, that wealth manager would have told you it was a foolish decision, right? In last 5 years, this rental yield, because flat prices are being property prices have been flat, rental prices have moved up by inflation, right? It has moved up. Rental yields have moved up by 3-4%. Because now rental yields have moved up. Now the rental yields in Bangalore, if you take, is between 4.5 to 5%. Second, because of this monetary stimulus, if you see in last 3 months alone, home loan rates have fallen from 8-9% to 6.5%, right? This two combination today with the tax incentive, it is very attractive for somebody to invest in property. For example, in states like cities like Bangalore, Hyderabad, 4.5 to 5%. I get rental yields versus a 5.5, 6%, 6.5, 7% home loan rates with a tax advantage, right? That, and also income growth has happened 2-3%. Income growth has happened. Income is not flat. Property prices have happened. It's become more affordable. That will also help. Now, what has helped? Monetary stimulus has helped. Fiscal stimulus has helped. I'll tell you why fiscal stimulus has helped. Lot of companies like Brookfield, etc., and all have invested a lot in commercial estate. As they have invested in commercial estate, it has helped rental yields move up. If no rentals have not happened, it wouldn't have helped in moving up. Brookfield has come and invested in certain properties, and they are ready to give higher rentals. Commercial rental yields have moved up, right? This, again, because of this fiscal stimulus and monetary stimulus, it will help in this gross capital formation in India moving up. Again, economy, gross capital formation moving up in India because household capital formation will move up by they putting more houses. As they're putting more houses, it will benefit, again, more jobs, etc. Housing industry as such can do well, right? This is what one thing I wanted to point out on this slide, why it will can benefit in India. Your gross capital formation, it's a misnomer what people talk about. Gross capital formation falling, private is not investing, public is not investing. It is not right. In India, public expenditure happens. Yeah, there are limitations. Government is not spending, but there are bodies like NHAI, BHEL, ONGC, they all have been spending. Public, if you see public, yeah, it's been flat, but still it's been grown from 7% to 9%, the fourth line. Even private capex is flat, but it's flat. But the problem has been household as a percentage of GDP, which could change. Even in this estimate, they are talking about from 9% going back to 16%. If this curve improves, automatically economy advantage will happen. Again, as I said, 50% of the economy, more than 50% of the population is dependent on agriculture. There's another statistics. More than 40% of jobs which are created are related to housing related. I'll tell you why. Financial services, if you look at today, credit banks loan deti hai, right? 30% I think loans go to home loans, right? It's indirectly more homes are getting sold, more home loans. 1 point. Building material industry, it's a huge industry, whether tiles, plywoods, unorganized industry, but it's huge unemployment, employment generating industry because all labor intensive industry, right? So they all actually contribute significantly. Real estate, construction alone, that's another thing. So they can all again prop up economy, companies, etc., etc. That can all benefit. And obviously government has also done something in terms of RERA, etc., which is also creating some kind of backbone towards a favorable policy which can help gross capital formation. So this is what I wanted to say, that fiscal and lower rates, GCF positive, if you look at the middle line, and because of that, income growth can happen, and it can happen for longer term, which happened in 2003-8. As I in my first pointer said, because of geopolitical tensions, some things can shift. So if you see in last 3 months, India is going through one scheme called as PLI scheme. It is a scheme which is incentivizing companies to set up mobile phone manufacturing, for example, in India, right? Their government is giving some incentive of 5-6% if you put up manufacturing facilities in India. Automatically, some companies who are importing from China will slowly put up facilities in India. Same thing as I said, chemical industry, as I showed you in the first slide, a lot of chemical companies have done well. One of the reasons why chemical companies have done well is China as a country. It was not because now this is nothing to do with geopolitical. If you see in January, February, March, actually the real reasoning, January, February, March, China went into a lockdown, right? Because of that, there are a lot of shortages of chemicals. And chemicals are used in every industry, whether rubber, medicines, paints, adhesives, anything, right? All industries, there is some other chemical involved. Now, and everything, more than 60% of their chemicals was imported from China. Now, in that Jan-Feb period when there is lockdown, a lot of things were short of supply. That is when a lot of global companies realized that my one lone sourcing will not work for me. I have to diversify. India, if you see long back, last 50-60 years, there have been small hubs here and there, like in Bombay, Parel area and all that. Hubs where there is manufacturing hub, where they have been working on small scale here and there. They were not having advantage because, again, China having policy incentives, etc. Because there is a shortage of supply in January, February, chemical prices shot up. And that benefited India. But India became viable and they all raised their hands and said, "Arey, I'm ready to supply." So a lot of global giants like Dow, etc. came to BASF, etc. and came to India. "Arey, you all are ready to supply. Okay, we are signing 5-year contract at these prices." That is why also you saw a lot of these, chemical companies doing well. These are long-term stories which can benefit India. I'm just trying to relate that to stock markets also now, how it can benefit chemical companies. So there is a reason why even chemical companies did well, because they have given you now 5-year visibility. Why those companies, they have got assured contracts from companies like BASF, Dow Chemicals, etc. to supply them products for next 5, 10, 15 years and at a predetermined price, fixed price, so they know what their margins are, right? So this is going to benefit India, as I said, geopolitical tension, fiscal stimulus, and income growth. Now I'll come to stock market because that is where I am expert in. I have worked in, not expert, I have worked there in the last 10-15 years. As I said, stock market at the end reflects earnings. Earnings reflect what companies' sales are, right? Which I said price into, which is inflation into how much quantity I sell, and that is on top determined by fiscal and monetary stimulus, which I mentioned, right? Now I'm coming to markets. Markets are related to all this. If you look at long-term Nifty returns, I think Nifty has given some 10.5 to 11% returns in 1993. And if you mirror India's companies' earnings, Nifty's earnings, CAGR, it's also similar. India's GDP is also 250 to 200 basis point lower, right? So everything is correlated. Stock markets in near term, somebody mentioned, right? There can be a lot of speculation. That is only 1 day, 2 day. But as you move to 6 months, 1 year, 3 year, 5 year, it correlates with your earnings. So as I showed you that 17 years, 2003 to 2020, they have given some 12% return. Our earnings also has been similar. Even US, in spite of Lehman, etc., 10% return, earnings also have been 8-9%, right? So it actually converges, earnings and so whatever all I said till now, it is very important for markets. One slide here. If you look at India 2009 to 2017, please focus on the mid chart. 5% CAGR returns. So stock market return also been only 5% because India, as I said earlier, decade of lost opportunity, we did not gain advantage. Same, but if you go back to 2003-8, which I said was a golden period, 21%, stock market return also been similar. Now, if you look at last 11 years, India Nifty, there's again a chart. Nifty has given only 5%, as I showed you, right? 5% CAGR from 2009 to 2017, 5% CAGR and then 0.2. Returns are being 5%. It mirrors 5% to 5% Nifty returns and Nifty earnings. S&P, which is again S&P 500, the second line, 14% return. That is all I mentioned, right? Facebook, innovation happened in US. Let's go back to the first slide. Innovation happened post Lehman. Innovation happened helped Apple, Amazon, Microsoft, FANG, which Sir mentioned. That all led to this earnings growth. So everything is related. Innovation, companies benefiting, earnings growth, and that running through stock market prices. Everything is related. So if you're able to catch those trends, that's how you make long-term money. FIs look at all this, as Sir mentioned. FIF flows, actually, if you see a lot of FIF flows, that's a misnomer. India has not received FIF flows. You can see this in these returns. FIF flows daily, right? Somebody who's putting 100 rupees, he might today put 70 rupees and then he'll say, I'll wait, right? Don't look at daily. If you cumulative number in last 11 years in this returns also, we can make out India's underperformed. The last line is Taiwan, right? That also is given a 10% return. It is India underperformed even Taiwan. Because as I said, right, Taiwan may a lot of advantages happen, which India may not have. This could reverse in next 11 years because of whatever reasons I said. Everything will flow in. Fiscal stimulus, monetary stimulus, higher inflation, more companies becoming viable, their profits going up, automatically stock prices will go up, right? In last 5 years, again, right, as I said, now this slide, see, as you move towards 15, 16, 17, 18, 19, and 20, if you see 2017, 423, even now we are around that levels only. Hardly flat earnings growth. And look at in the last 5 years, Indian markets are underperformed because the earnings are underperformed. Again, economy, companies are underperformed, stock market are underperformed. But look at S&P 500. It had one of the worst presidential elections. It is the most controversial president, Trump. He tweets, he is more interested in tweeting. That is what articles talk about, right? Information, that is what people give, right? But look at the returns during maximum miss period. 11%. He has outperformed India by 7%, who is supposed to be the best leader, most known leader, public leader, etc. We talk about, right? But his policies have failed because earnings have not come through, right? This gives you the report card. Stock market, as I said, reflecting your earnings growth. So I'm not taking any sides. What I'm trying to say is that everything is important. I'm trying to relate towards that. Taiwan, we don't know also who's the president and prime minister. It's given at again 10% return, out from India by 7%. That also CAGR. I'll just now cover two last points from my side. First thing is now, again, related to stock markets, and this can help you actually in your real world also, right? Which companies you can look at when you want to get employed, or even if you're putting your own money in stock markets. One thing I would like to tell you all here, just before covering my points, whether you all want to work in stock market or not, please start investing on your own. On your own. Now, nobody will give you that. Say everybody is saying go to expert and etc. That will be my following slide if you don't understand. But because you all are in the world of finance, you all choose finance as a profession. Please invest. It will be 100 rupees, 1000 rupees. It doesn't matter. Even if it's a 10 rupee, there are 10 rupee stocks also. Please invest. That is how you learn. When you, and I'm telling you, you should. I'm just being frank here. Out of 10 people, let's assume all 10 make money, right? In last 3 months, you would have invested, make money. But wait till you lose your money. That is when you will learn. Please invest, then you will learn. What is the learning in last 10, 12 years is now coming to companies, right? What has happened in India? In last 10, 12 years, as I showed you, 5%, 3%, economic growth has been slow, inflation has been low. Economy has become more from becoming more broad-based, become more consolidated. What has happened? Leaders have gained more advantage. Why is that? Is because in last 10 years, if you look at our GDP number, real GDP average has been 5.5%, 6.5%. Inflation has been 2-3%. We have grown by 10-11% only, right? Only 10-11% growth. Now it comes to companies, they have the volume. As I said, sales is price into volume. Inflation has only been 2-3%. My volume would have been around 5-6%, right? So my price has not moved up. My sales have not moved up that much. I have not got the advantage of operating leverage. As I said, in last 10 years, a lot of companies would have invested. I gave you an example of Ocean Steel, right? Any company, you can take example in the paint industry, for example. Paint industry, companies make contribution margin. Contribution is sales minus your raw material cost. 50 to 55% depends. 50 to 55% is average margin they make. When they make such high margins, if they would have made such high margins since 2010, let's take any company, X company who would have 100 rupees sales, they would have made 55% contribution margin. they would have had, let's assume 10 rupee as employee cost, right? Let's leave all the other costs aside. I'm just trying to make you like understand this. 45 rupees is the net profit to the company before tax. Let's take it simple. Let's no interest, no depreciation, just for a simple understanding. Cash ke मामले में, right? I raw material kharida, I am left with 45 rupees, 10 rupee I gave salary, I am left with sorry, for 55 rupees after raw material cost, I gave 10 rupee employee cost, I am left with whatever rupees. Okay, now I looked at 10 years sitting in 2010, I would have envisaged that, oh, next 10 years, because I looked at history 2000 to 2010, it was the best years. Now next 10 years will also be good. Instead of giving 10 rupee as employee cost, let me recruit more 5 people. I increased my employee cost from 10 to 15. I said, because I'm doing 100 rupees sales, I will increase my sales to 200. So I put up capacity also for more 100 rupees. I took loan. I have now 100 rupee का sales करने के लिए मैंने 100 रुपया डाला, loan लिया, so 10 rupee मेरा interest cost भी आ गया. Now my profit, which was 45 rupees, has come down now because I'm giving another 10 rupee as employee cost. So it's come down to 35 rupees. I'm giving interest cost also to 25, right? 25 rupees, 10 rupees. So my profit has now come down to 25 rupees sitting in 2010, dreaming that by 2020, everything will be utilized, profits will double, right? But if in the last 10 years, macroeconomic growth has been lower. Now look at a larger company like Asian Paints. He has understood that the economy, by 2013-14, he has understood economy is not growing that fast. I need to do something different. You know what he did? Because inflation is not growing, that 55 rupees, 45 rupees, whatever, 55 rupees gross margin he had, he increased his branding expense. If you look at last 2010 to 2016, 15, 16, larger companies have spent more money on advertising. Now, because they spend more money on advertising, they're able to build brands. As they are building brands, they're taking away market share. As I said, sales is price into volume, right? Even though GDP is growing by 5-6%, they're able to increase their volume a little bit more because they have become more brand, better brands because of the perception. Second, because of their brand is better, they're able to price a little higher price. So instead of 3 rupees price increase, they have taken a 5-6 rupee price increase. So my gross margin, contribution margin, which I mentioned, right, was 55 rupees. Suddenly it goes up to 60 rupees. Wow. Companies like Asian Paints, they did the advertising expenditure. Now look at Asian Paints, 60 rupees. My employee cost, everything is the same because they're already a large company. Only I did some extra branding expense for 1 year. I built my brand image. Now he's sitting on 40-45 rupees of free cash flow, which is called profits, right? मेरे पास पैसा हाथ में. Now look at that. Go back to that small company. He's sitting on 25 rupees profit because Asian Paints has done brand building exercise and the industry is not growing that much. He has taken away market share from me. My that 100 rupee has now sales has become 90 rupee. तो मेरा profit बेचारा 25 रुपया खट के 10-15 रुपये हो गया. I'm actually in a disadvantaged position. That is what has happened in last 10 years. Because margins are lower, larger companies have been able to gain advantage. Now today Asian Paints is sitting on that, as I said, right, 45-50 rupees of cash 1 year. I'm just theoretically trying to make it under. He's going to this small company and saying, "Mere paas aaja, I will pay you 100 rupees. Your sales, one-time sales value, I'll pay you. You come to me." This small guy has no advantage now because he's losing market share every day because he doesn't have money to build brand. So he's going and selling his business to Asian Paints. That is what has happened in the last 10 years and that will continue to happen. Now he's sitting on that 45. He's either investing in acquiring companies, putting up more capacity. He is able to, charge higher pricing. All those, whether you take Bata's, Asian Paints, every company, simple, which you use daily, right? That is what I'm trying to explain. Colgate, Patanjali of the world, all whether listed or unlisted. That is what, and that will continue to happen now because now in last 10 years they have gained so much profits, actual profits, cash flow from operations, right? Itna paisa I have gained, whether it is an L&T, 3M, Honeywell Automation, all those companies have gained so much cash flows. Now they are mastering, they are now accelerating. As I said, now fiscal stimulus, monetary stimulus, all that will benefit India. A lot of these larger companies will gain that now in the next 10 years because they have done the investment. Whatever growth, incremental growth, they'll all gain now because they have that cash flow to gain. in last 10 years has been long period of lower growth. All these smaller companies, they have gone out, right? Or they have lost out. That's what I'm saying. It will continue to be in next 10 years. See, near term, why I'm telling you this is in last 2 months, you would have seen a lot of these penny stocks all moving up, right? In stock market per se, ignore all that. Over medium term, earnings get reflected. All these larger companies have gone, benefited now. You will see that in next 5 years, all these companies growing much higher than the nominal GDP growth, and thereby their stock price also reflecting that. So now I'll come to my last topic, which I'm saying is that about stock market. Anybody who is interested in stock market, how to trade in stock market, right? For a personal, even somebody who is getting into professional fund management, etc. Please understand, never chase news. I'll only use this phrase. In the jungle, lion is the king, right? He's the laziest hunter. If you read a lot of books, what I have read at least, they say that he's the laziest hunter. He only hunts when he is hungry, or he only hunts when some prey comes nearby. There are a lot of other carnivorous animals who actually go on running behind their prey, right? And they don't get. Be like that. Trade like a lion, I'm saying, in stock market. Ignore news. Look at fundamentals. The very first point what I mentioned in my presentation, Warren Buffett. Look at companies. Wait. Somebody who had invested in 2018-19, he did not make any return till 2020. But somebody who had actually invested in 2020, in 3 months only he made, because he had done the load of research, reading, research, etc. He waited for the price, and then that is what I'm saying. Analyze like an ant. Ant is he works very hard, right? Day and night. Whatever he carries, we should work hard, identify your companies, and wait for the opportunity. Wait for the opportunity. In last 10 years, for example, who would have invested in these larger companies? So I said, if you're able to catch those trends, in 2009-10, when I was in Reliance, for example, we caught that trend of pharma. When we understood like a lot of companies, products are getting off patent in US, and a lot of things could flow into Indian companies like Sun Pharma, Lupin. We made huge money. A company like Divi's Laboratory, it had a 1,500 crore market cap. Today, day for yesterday, it is entered into Nifty, right? We were one of the largest shareholders there. We identified at a point of time. I'm proud to say that, because one of the reasons is we captured that trend. That is hard work. We understood that so much things happening, getting off patent, a lot of API companies, etc., could benefit in India, etc. But stock price went up, it again came down. We waited like a lion only. We traded that. Be like that. Anybody who's saying, be patient, trade like a lion, analyze like an ant, right? Both economy, top down, bottoms up, however you want, everything is related. Analyze, read more, and gain out of experience. Only invest, I'm telling you, whether personal money or if you want to get into fund management industry, invest only what you understand. Whatever I spoke about now, like digital and all, if you don't understand, don't invest. However, you would have missed on it, doesn't matter, because if you don't understand, you will lose out, right? Even in a personal life, you will say, right, whomever you're going to marry, you should understand. If you don't understand, then that could be misery. Similar thing happens in stock market. You're going to marry that stock, marry that company. If you don't understand that, don't invest. That is the final point I wanted to say. This is one trend, as I said, trade like a lion. If you see, these are different cycles of different years. Between 2009 to 2020, as I said, long term, only 5% return had come. But still, if you would have invested as an expert, if you would have done your research, etc., if you would have invested either in companies for long-term trends, or you would have kept analyze these cycles, you would have made a lot of money, right? So 2016, we were at 7,000 Nifty. Today we are sitting at 11,000 in spite of Corona coming in, right? We are still doubled your money. You would have done your hard work. So I'll end my point here. Only what I wanted to say here is, don't think Corona, etc. has come. Koi company nahi hai. India is getting into recession. Nothing to worry. I think next 10 years could be advantage India, number one. So indirectly, it's going to advantage you all. Please do your hard work. Please contact people. Now you all have those digital platforms also, LinkedIn, whatever platforms. Outside college also, please do your hard work. Meet people, learn, listen. It is, read, listen. These two things you have to do. Keep your ears and eyes open. Simple. Talk less. Learn that. Talk when you find people whom identify industries which you're going to go and talk to them. and try to gain opportunity even at less salary. It doesn't matter. You get there. Because this bear market, if you get in, you will gain that next cycle. Don't worry, next cycle is a best cycle going to be for India. Gain that opportunity. As I said, all those industries, whichever industry you want to get into, learn and get into those industries. It's the best time to get into those industries, and then you can gain from that. So I'll end my this thing here, and I'll be happy to take any questions, sir.
Through and through the class, Ratishji kept saying that, earnings, either today or tomorrow, the earnings matter. Second, please remember Asian Paints. EIC slipped into Bhushan Steel, slipped into Asian Paints. What did Asian Paints do? They created a moat around themselves. Moat, M-O-A-T. Moat is something which surrounds a fort. The enemy has to cross the moat to attack, right? So moat, the deeper and wider the moat, the more stronger the fort. The deeper and wider the moat, the stronger the fort. Superb example, Asian Paints, brand premium. Because of that brand premium today, Asian Paints is still numero uno in paints, right? So please understand, moat is what differentiates, earnings is what matters. And yes, do something that you understand. That's a statement from Warren Buffett. Do something which you understand. So he never invested in derivatives till he understood that. Yes, he never invested in, right, what we call as, I'm sorry, the dot-com stocks. And everybody called him a fool, right? That's the time I met this dear colleague of mine in SIS. Those were the days just after dot-com, and everybody was saying dot-com, dot-com. Warren Buffett said, I don't understand this, so I'm not investing. People called him a fool. Said he's an idiot, he's an old fool. But today, history has proved that, only when you invest what you understand, it is better. I think it's been amazing, right? Thank you, Ratishji. I can only thank you very, very much. Right? Brilliant lecture, says Ria. Ria Pillai says brilliant lecture. I would like to end with something which I've never told my students. So, but Ratish will be shocked now. Sir has changed completely. So I want to tell all my students, it's important to marry somebody you love, but it's even more important to marry someone who loves you more. तो ये थोड़ा ऐसा सब कभी बात नहीं करते. Ratish is shocked. ये क्या हो गया अनिल sir को? Yes, but I believe in that. So sir said, even when you get married, right, it's important you understand the person. Anil Menon का एक dialogue याद रखिए. It's important to marry the person you love, but it's more important to marry the person who loves you more. Ratishji, I am so thrilled that I have seen you blossom, and what pride I've got. Just emotion. I'm choked with emotions. I've seen you as a student, like all these kids here, Shreya, right, Cheryl, right, Subbu, and today when you spoke with such authority, you can see the feedback, sir. I can only say thank you very much. I learned a lot. I learned a lot from you today again, right, with all the practical examples. Love you is all I can say, Ratish. God bless you. Thank you very much. A Sunday very well spent, invested. Thank you all the dear students.